At CLA, we're not just in your corner. We're on it. We're advisors and advocates, planners and patients, consultants and cart returners. We coach third on Saturdays and businesses during the week. We're your neighbors, which means wherever you're coming from, we're right there with you. Wherever you're going, we'll get you there. CLA, CPAs, consultants, and wealth advisors.
Welcome to the Iowa Economy Podcast. I'm your host, Chris Conetzkey, president of BPC and publisher of the Business Record. The Iowa Economy Podcast is supported by our sponsors, CLA and the Iowa Lottery, and it's your place to get the economic insights you need to help you and your business stay ahead of Iowa's economic curve. There's plenty of going on that makes it hard to stay ahead of that curve. As usual, there's no shortage of uncertainty out there, especially as it relates to fuel prices. Gas hit $4 a gallon. And of course, there's questions about the future in Iran that are continuing to linger. And we've got two fantastic guests with us today. They're going to help us dive a little bit deeper into that topic, help us maybe understand what it means here in Iowa, and provide a little bit of insight about what might be going on in the future. So with us today, we have Jeff Lenard. He's the Vice President of Media and Strategic Communications for the National Association of Convenience Stores. He leads the association's industry-wide external communications campaigns to advance the community convenience stores as positive economic and social and philanthropic contributors to the communities they serve. He's, of course, he also hosts a podcast and is heavily involved in producing media for the association. So he's going to be a great guest today to help provide us a little bit of perspective. Also with us today is Brenda Neville. She's the president and CEO of the Iowa Motor Truck Association, where she served for nearly 4 decades and now represents more than 400 trucking companies and industry partners across Iowa. So two folks that that are on different parts of the way that fuel perhaps impacts businesses and the communities that they're participating in, and of course businesses. And so we'll get kind of both of those perspectives. That's the topic that of course everybody's looking at as in regards to what's going on in Iran. We'll dig into that a little bit here. But first up, we're going to have Jeff give us what we call the economy in 3. So 3 insights. You've got 3 minutes to give us kind of 3 things that you're looking at right now in the economy. So Jeff, we'll go ahead and have you take it away.
Well, I have 3 numbers. They're increasing. They increase in size. They also go from depressing to more optimistic. And you touched upon the first. I'll start with 4. And that's
start us in the negative and go positive.
Yes. Yes, which is I'm going to try to end on a more aspirational note. But the first is, you mentioned it, $4 gas. Now, that's not the case in Iowa, but nationally, gas prices are over $4 a gallon. They've been pretty bumpy ride. We don't know where they're going because day to day, you see a huge change in the price of oil. For anybody paying attention to what does oil mean to gas, there's 42 gallons in a barrel of oil. So if a barrel of oil goes up by $1, that's about 2.4 cents per gallon in the oil, but that usually translates to gas. So if there's a $10 switch one way or the other in oil, that's what you can usually expect to see with gas eventually. So at $4 a gallon, and again, it's lower in Iowa now, but that's a psychological point that really affects people. They start to change their behavior. At the gas pump, they're less likely to go inside the store. About 62% go inside the store. So from the gas station angle, we're looking at, will people go in stores less? The bigger factor for all retailers is there's this constant drumbeat. When you're driving down the street, and people buy gas about every 6 days, but on those other 5 days, you're driving down the street, you're seeing gas prices, and it wears on you. And what we see from consumers is they're generally in a bad mood when gas prices are rising or they're high. So it's something I think all retailers need to look at, whether or not they sell fuel or not. Number 2, I think ties in, gets a little bit more aspirational, but 22% of consumer product goods right now are considered private label. That means it's a store brand. It could be something like Aldi, which is largely store brand, or it could be convenience store chains like those in Iowa, whether it's Casey's or others that sell private label. Now, that percentage has increased over the years, and it's directly tied to the economy. We are seeing people are trading to private label because they find a better value there. So that's a watch out in terms of how the economy is functioning. But it's also a little bit of a positive, because if you have a private label product that somebody likes, they can't get it somewhere else. So while everybody else may sell some of the same items, private label gives you a little bit more of an opportunity if people embrace the product. And the third is one I think everybody should be looking at. We do consumer surveys every year, and we ask all kinds of different questions. But one is we asked, what attribute do you most want to see at convenience stores? Now, number one and number two, no surprise. Are they close? Are they open? That's something you see in any Google search. But the third word that popped up, 53% said it's very important, was easy. And I think that's an opportunity for all retailers, something they need to look at. Are you easy? And that could mean fast. It could mean a variety of other things. But you need to look at your operations and say, are you easy? Because that is the word people most look at. And whether it's adding new technologies, did it enhance the customer experience? We'll probably talk a little bit more about that later. But how are you making their life easy? Because the competition is also the internet, and that enables you to just sit on the couch and have people bring things to you. So find a way to be easy. 53% consider it very important. 90% overall say it's important.
Well, Jeff, appreciate you giving us the rundown there of three good key points, and we'll dig into each of those at some point here as we go forward. Brenda, you're up next. So we'll switch gears from the consumer's angle of things to trucking, which is, of course, another big input in the system for business costs. So, Brenda, why don't you go ahead and give us kind of your 3 and 3 as well?
I will. Well, many people will say that trucking is one of the leading indicators when it comes to the economy, because when freight starts to pick up, that usually means that the broader economy is improving and recovering. And as I went out and talked to the members over the last couple of weeks, and we do regular polling of our members just to get the pulse of what's going on in the trucking industry. Our industry has been dealing with a freight recession for about the last 3 years. So things were starting to turn around. In November, there was some real optimism that things were starting to turn around. And so I'm going to give you the feedback that I just got in the last week from board members as well as other trucking company owners here in the state of Iowa when it came to the economy and how they're feeling now since things are going on in Iran. But the first thing that my folks look at and we look at and have been monitoring very closely is freight demand versus capacity. And obviously when demand is soft and capacity is high, the rates drop and the margins really tighten. And that's where we've been the last 3 years. During COVID, there was a huge influx of trucking companies that entered into the market. And that's really the capacity issue we've been dealing with. Way more trucks over the last 3 years, way more trucks than freight. And so we were starting to see that turn around in November. Demand was starting to tighten and improve. Capacity has changed a little bit over the last 6 months. The rates were starting to recover. People were watching that. The spot markets and the activity on those markets have really, been changing in the last several months. They also pay attention to, how many trucks are on the road and how many trucks are parked at the lots for truck stops or truck parking. We're always watching how many companies are exiting. And so things are really starting to improve. Now, the second thing that is on the minds of a lot of trucking companies at this point is the oil and fuel prices. And the conflict in Iran is certainly, we're watching very closely. Throughout the last 3 years during this recession, the one thing that we had been able to celebrate was that fuel prices had been generally stabilized. And that is the third largest expense at a trucking company behind labor and equipment. And so having this stabilized market, fuel market over the last 3 years was something that was very welcome because the rates had really dropped off, the capacity had dropped off. And so companies were able to, protect their bottom line a bit, if you will, because of the fuel prices. And then the other third thing is the third item as far as the economy as a whole, consumer demand and inventory levels. That was something else that our members in the trucking industry watches very closely, and the retail trends, inventory to sales levels and ratios, warehouse activity. Again, during COVID, the warehouses filled up. There was a lot of surplus. We were starting to see some of that really changed significantly in the last 6 months in particular, which was also hinting that there was the beginning of what we were hoping was, a change in the direction. The freight recession was going to hopefully be coming to an end. Again, because of what's going on with fuel prices and everything else, that is the one unknown. But in those other two areas, the freight demand and the capacity, as well as consumer demand, we are seeing that start to improve. And so the folks that I represent were cautiously optimistic that the economy was starting to turn around, but with a big but.
Well, I think that you both did a great job of highlighting a number of the ways that both of these are such indicators. Jeff, you did a great job of describing from a consumer sentiment standpoint and that feeling. And you're reminded when you go fill up your gas tank, everybody sees it. And I know that margin for a lot of the convenience stores is based really on those in-store sales, not so much the gas itself. It's such an interesting time because you're in this moment where you're seeing the prices going up at the gas pump. Brenda, what you're talking about, well, that ultimately probably has, I would imagine, some downstream effects on costs to folks that are trying to move goods. And so that creates kind of an interesting storm. And that's where we like to be at when we're talking about this. So hopefully we'll get to unpack some of that. We'll have more from our guests in a moment, but we are able to bring great conversations like this to you because of the support of our sponsors. This next segment, Right There With You, is brought to you by CLA, a professional services firm with a rich wealth of knowledge and experience that we're tapping into in order to provide you with a hand on your shoulder and perhaps just a little bit of clarity in the midst of the economic haze. Right there with me today is Cheryl Tuttle, who provides financial leadership and strategic oversight for nonprofit organizations as a CFO through CLA's Client Accounting and Advisory Services. Cheryl, welcome.
Hi, it's nice to be here.
Well, I think one of the things that maybe I'd like to learn a little bit more about from you is many organizations are rethinking how they manage their accounting function. What do you see as sort of driving this shift towards outsourced accounting, especially in the nonprofit sector?
Yeah, we're really seeing an increase in financial complexity and reporting demands. You mentioned that I work with nonprofits, I think particularly with nonprofits, but all industries are experiencing this. We're seeing companies try to work with leaner teams, and they're under a lot of pressure, and they find that they're not able to get everything done in the time that they want to finish it. And technology's out there. We all know about AI. Everybody says AI can do, what people do, but in our case, interpretation is just as important as, what the technology can make things simpler for us.
Nonprofits in particular, what challenges do they face that perhaps you'd be in the best position to help them with?
Yeah, nonprofits often have grant accounting. They need to apply for grants. They need to report afterwards. Maybe they need to request a reimbursement. Nonprofits, actually, their entire accounting structure is a little bit more complicated than for-profits. They might not have some of the same kinds of debt structure or, equity issues, but they have a lot of different revenue coming in from different sources and a lot of things that they need to be in compliance with as well.
In what situations do you find that outsourced accounting tend to lead to the most value for an organization?
Organizations going through a period of change or growth or potentially even a staff change. You have a turnover at a CFO level, a controller level, or even a staff accounting level. Our services are more than bookkeeping. We are full service accounting, and it is not one size fits all. We can come in and do any level of accounting from fractional CFO work to helping you with your payables and your receivables. We also see where, organizations need higher level skills, but they can't afford to fill that position. And so they can hire it on a fractional basis.
We had a power breakfast about nonprofits, and it's a key area for us. And the challenges and the pressures, especially right now, are I'm sure, tremendous on organizations. And I'm sure that's something you all are able to help them navigate.
Absolutely. I have over 20 years of experience in the nonprofit CFO and chief operating officer role. So I think we have many people in our organization across the country at the chief financial officer role as well. And we're just able to offer insights without having to hire a full-time person.
Which I imagine that's a key selling proposition for nonprofits that are often on tight budgets, of course.
It is,
For an organization that's maybe considering an outsourced accounting relationship, maybe they're not sure where to start, what would be one practical first step?
Really assess what your needs are. And we get phone calls of companies calling us and they don't even know what they need. So we can help work through that process. But if you're able to identify where the gaps are, what it is that you need assistance with, that's always a great first step before you make that phone call.
Well, Cheryl, thanks for taking the time to join us today. I know there's a lot of nonprofits that are looking for any edge right now, especially in this competitive environment and some of the challenges that they're facing. And I know CLA has some of the services that might be able to help them navigate this environment as well. So thanks for joining us for Right There With You. And I'm glad CLA is going to be right there with us all year long. If you want to learn more from Cheryl, you can contact her at her email address and at www.claconnect.com/resources to find additional information. Well, maybe my first question will be for you, Brenda. When we talk about when that you said the third largest expense was fuel. So as you're thinking about that, help us understand maybe what some of the effects of that increased fuel cost might be downstream a little bit from the trucking industry itself.
And it's an example and a scenario that's very common to anybody, even the average family, right? When fuel prices go up, their overall costs go up, and that impacts, what they're doing within their household. For a trucking company, the same thing happens, but I think it's important that we note too that for trucking companies, with it being the thirdest, in the top three as far as expenses, labor, equipment, and then fuel. Majority of trucking companies have surcharge programs in place, right? Because if fuel prices drop or increase by 50%, obviously that trucking company can't absorb that. So there is fuel surcharges which are passed on to the shipper. And eventually that's passed on to the consumer. So everybody's impacted, but for a trucking company in particular, especially, the fuel efficiency of a truck is very small compared to a car. They watch those prices, and even a minor increase in fuel prices will impact their overall operation. And eventually, it is passed on to the consumer. But trucking companies watch their fuel pricing regularly. Trucking companies have programs in place. They are monitoring what those fuel prices are at the pump across the nation, and they basically tell their drivers where to go to fuel up based on what those prices are. Even if it's a penny difference, that is a lot of money when it comes to a trucking company and their overall operation. So they watch that very closely. But at the end of the day, we're all impacted by it, even though, there's a lot of conversation. People will call. In fact, I just had the media call me this morning to talk about surcharges. And, they said, well, basically that isn't impacting the trucking company because they're passing it along. It does impact them. It's not like they're able to totally pass that on to the companies. But at the end of the day, we're all impacted. And it starts with the trucking companies, and their prices go up. And guess what? So do the prices of consumer goods that we enjoy every day.
Jeff, I know gas is the thing we see, and it's the thing that reacts the quickest probably in a situation like what's going on. Would the consumer goods in the convenience stores also be up for price increasing this quickly, or is that something that would be more of a delay downstream?
So whether it's gas or whether it's in-store items, I think every business makes decisions, and like we were just talking about, margins constrict. And we see that in fuel. The margins are probably down about 6-7 cents per gallon from what they normally are, because most retailers are trying to hold back those price increases. They don't want to be, in the news parlance, you say above the fold, in terms of somebody saying, here's the highest price on the street. And also people have long memories, and people tend to say, oh, I remember when that person had higher prices. I need to watch out for that person. Now, there could be a variety of reasons behind that. It could be when they bought gas, how they bought gas, what their contracts are. So there's all those dynamics. And then you want to get them inside the store. People know what their favorite items are inside the store, and they've been through this whole whipsaw of inflation over the last couple of years. So they're probably just as hesitant to increase prices inside the store, because people finally settled on, okay, well, it seems like maybe prices steadied a little bit. You also you want to find deals. And one of the words that's most often used in our industry is value. Value, yes, means price, but there's other things that you can associate with that word that you can also use to push business or to grow business, particularly when times are tough. Valued, and how do you give that customer the understanding that you value that customer? What combines with price? And then the third factor is values. Talk more about what you mean to the community. Talk about those kind of things, because when people see all this negative news associated with fueling prices, give them something positive. Tell them a story. And I don't mean disingenuous, but double down on your communications.
Right now, this is a few weeks into the war in Iran, and so as you think about that and what the effects are in the short term versus long term, maybe Jeff, I'll start with you. But as you think about it from the short term versus long term, where would there be some differences in how you might see this going? Not how you see Iran going, but right now there's some uncertainty about how long the conflict will last, and so curious what that means within the convenience store industry.
What we see is, of course, there's no average consumer. We have average numbers, et cetera. But with the convenience store industry, we do about 160 million transactions a day. So roughly half the US population is buying fuel or going inside the store in any given day. If you aren't doing it every other day, somebody else is making up for you. But what we see is that the biggest effect is the cash customer. And that's about 20% of the people who buy fuel and about 40% of the people inside the store. They're the first ones to cut back because they feel the price increase most directly. They have a $20 bill and it only goes so far. If you're putting it on debit and credit, you tend not to pay as much attention to how much your fill-up was. You know the price per gallon, but you don't necessarily pay attention to the overall amount because you're going to pay it down the road, 30 days, whatever. So you start to see those soft signals or stronger signals with the cash customer. And then it trickles through the economy in terms of how other people do it. What are they doing? Are they going on vacation? Are they going to switch from flying to driving? And all those things, I think, will take more time. We've also talked to people who say, should I get a more fuel efficient car? The average new car is around $50,000. The price increase in Iowa over the last month is 80 cents. So that's an awful lot of gallons to make up. And so, but if this does go on a longer period of time, people will start looking, do I want to get a more fuel efficient car? Do I want to make some of those bigger decisions? But right now it's day to day. How can I save a little bit of money? How can I make my money go a little further? It starts with the cash customers, but we'll see more customers as this goes further along.
Brenda, how are your members viewing the conflict in Iran and the effect maybe on their business?
Well, the one thing about trucking is they're very nimble, right? I mean, every day trucking has to pivot when they're delivering products. And so the philosophy at most trucking companies is it has to be a pretty significant obstacle before they're really going to, have to change things dramatically. And fuel being such an important part of their operation, it's always in the forefront. Some companies do, bonus fuel programs as far as if the drivers, are being very efficient with fuel. That's why you see a lot of trucks, if not, vast majority of them, and it irritates drivers. But when you're behind a truck and it's only going a certain speed, those are speed limiters. Part of the reason is safety. That's a big part of it. But the other reason is fuel efficiency. If you're going a certain speed, 65 to 70, that's not going to be as efficient if you're going 60 to 65. And so what you'll see is trucking companies, if this conflict goes on longer than they would like, you're going to see a tightening up of that. You're going to maybe see some more programs as far as fuel efficiency. And remember, for a truck, it's maybe 5 to 7 miles per gallon is what they're getting for fuel efficiency. So even changing that speed limit by 2 or 3 miles per hour, that makes a dramatic impact on the efficiency. So fuel efficiency programs are already very common in trucking. I would say what's happening now with what's going on, they're going to be tightening that up. They're also going to be, sharpening their pencils because they're buying massive amounts of fuel, right? So they're going out now and possibly renegotiating. They're talking to the shippers about the surcharges. So, I mean, there is a lot of sophisticated conversations, technology, and methods that trucking companies employ to ensure that when there is something impacting fuel, it's not going to impact their efficiency or their ability to deliver a product. And they're very good at that. They've had to do it for a long time. It's what they manage. I mean, there's a lot of trucking companies, they have teams of people that do nothing but manage their fuel programs and are involved with everything from training the drivers, educating the drivers, to working with the suppliers. So because trucking, I have worked for them for so long, so I'm very proud of this industry. Because they're so good at what they do, none of us are ever going to see a disruption in anything that impacts us every day, whether it's with the fuel or the driver, because that's just how good trucking companies are at dealing with these kinds of things. And fuel is right up there because it's such an important part of their overall operation.
Jeff, I want to go to your point about the psychological point, the consumer mood. I wonder if you could dig a little bit deeper into that for a second. When you've been looking at that, you said people are less likely to go into the store, right? If they're not feeling as good as they see their $50 tank of gas, right? Maybe talk a little bit more about some of the effects that you're seeing there.
What we typically see is it all depends on how much money they have and sometimes where they are in the month. We see different behavior earlier in the week than later in the week. It relates to both how much people spend and what they buy. Traditionally, what we see is on Mondays, people tend to buy healthier. They also tend to spend less and or look to spend less because they've gone out on the weekend. Maybe they went out to dinner. Maybe they did whatever they did. But then usually by Wednesday, Thursday, Friday, it starts to change a little bit. So it becomes, well, it's been a tough week. I deserve this. Yes, we may not do this big expense, but I deserve this right now. So you see maybe a little less of a salad and maybe more of a cheeseburger. That's one thing that we've traditionally seen. But what we've also seen over the last year is a change in behavior related to GLP-1 and things like that. When you are on these weight loss drugs, you tend to have one less meal. But what you tend to do is have one more snack. And we have seen a big increase in the category called alternative snacks. And that is anything from beef jerky to these other items that are higher in protein. And they are buying more of those. So there's a lot going on right now. And how do you pull some out from what's gone on with higher gas prices over the last month, with longer trends that relate to GLP-1, with some of the uncertainty related to tariffs over the last year, the reduction in inflation, maybe increase inflation. There's a lot to unpack here. So you just kind of look at every individual customer and how they're interacting, what's going on with companies. I think they're also looking at apps more and how do you have more conversations? Like I said, one of the best companies that does this, no relation to me, is Stu Lenard's. And Stu Lenard's is Stewlenard, the way Lenard should be spelled. It is a small grocery chain in the Connecticut area. Look them up. They do an absolutely fantastic job talking to their customers. Like, this is going up in price. This is a reason why. This is what we're doing to make it better. Fantastic in the way of communications. And it's a good model for any retailer or anybody that's dealing with customers.
Maybe a follow-up question as you were talking about that from a brand, I'll say brand loyalty standpoint. Have you seen any differences in how people are choosing? What triggered me was the app discussion where you were saying these rewards and loyalty type programs. But I'm curious whether there's been any broader trends towards identifying with a convenience store brand rather than just the price of the gas that, if you're driving down the street, am I going to choose the cheapest gas? A lot of times they have the same gas price. And so which one am I going to choose, right? I'm just curious if any brand loyalties have come into play.
Absolutely. And we've done surveys over the last 20 years where we asked a simple question: what would you do to save 5 cents a gallon? And the most common, we say drive five minutes down the road. And by the way, people don't like left-hand turns. So even if there's a store across the street, they don't like that left-hand turn because then there's another left-hand turn. And so most of them look at competition as being on the same side of the street. So when we ask the question, what would you say? Would you drive 5 minutes out of your way to save 5 cents a gallon? Usually about 70% say yes, I would. But what we've asked the last couple of years is, would you drive 5 minutes out of your way to go to the store you like more? And that actually pulls higher. Now that, of course, incorporates low gas price or presumption of low gas price, but also it has to do with customer experience, how you treat it inside the store. So all those elements kind of combine. You don't have to be the cheapest price, but you have to be the brand that people feel is fighting for you, and that includes price.
As you described that, I'm from outside Chicago originally, and so when people were telling me to get my pizza at a gas station, I was a little skeptical until we started eating the breakfast pizza, and now I understand what you mean. I will choose for heading up to an Iowa State football game. This is a shameless plug for Casey's, I guess, not a sponsor of the show, but I will stop at Casey's, and we always stop at the same one because I know I can get our breakfast pizza on the way, and that's part of our tradition of going there. So good example of what you're talking about there.
Yep, and you'll buy gas. While people go and buy gas and then go inside the store, they're increasingly deciding to go to the store and because they want to get something and get gas. Now, when gas prices continue to go up, that may change the dynamic a little, and they may say, okay, well, maybe I'm not going to get that sandwich, maybe I'm not going to get that pizza, maybe I'm not going to get that snack. That place is 1 cent cheaper. I'm going to do that. Remains to be seen, and that will depend on probably weeks or months, not days.
We'll have more from our guests in a moment, but I'm excited now to announce a new supporter of the podcast, the Iowa Lottery, which directly leverages its proceeds for economic development across the state. Today, we're fortunate to have Matt Strawn, CEO of the Iowa Lottery, with us to share a little bit more about the lottery and its impact on the state. And so, Matt, I know that I've had an opportunity to talk with you a little bit about the impact. Tell us a little bit high level about how the Iowa Lottery gives back into the community.
Yeah, well, thanks, Chris. And it's great to be here and great to be a sponsor of the podcast and make sure Iowans understand why we have an Iowa Lottery and the benefits it generates all across the Iowa economy. In fact, 93 cents of every dollar that is spent on a lottery product in the state of Iowa is redistributed back into the state's economy in some way, whether it's a prize paid, whether it's those proceeds that go to good causes, or whether it's those 2,500 plus retailers in every corner of the state that are getting a little commission for selling that lottery ticket. So it's great to see the lottery making that difference all across the state.
Well, I know there's some specific programs that you all help redirect funds back into. Maybe share a couple of the ways that you're giving back.
Yeah, thank you for asking that question, because the Iowa Veterans Trust Fund is the one that comes to mind for most Iowans when it comes to the lottery. When you think 40 years ago why a lottery was created, it was to fund important state priorities. And today, the Iowa Lottery is the sole source of annual funding for the Iowa Veterans Trust Fund, over $45 million to date. And that's a fund of last resorts that Iowans can tap through any one of the 99 county veteran services office out there. So it's just a great thing for the lottery to do, and for the people that play the lottery to know that they're supporting Iowa's veterans.
Well, I know you all are celebrating an anniversary as well. Share us a little bit about that.
Yeah, so we're coming off the 40th anniversary. I'm not sure what the traditional gift is for a 40th anniversary. Perhaps it's that big check that you can find at the Winners Lounge. You know what we're trying to do? We're trying to remind Iowans that there are many ways to win with the Iowa Lottery. It isn't necessarily those big billion-dollar Powerball jackpots. Now, you wouldn't turn one of those down.
No, I would not.
Maybe
media business is going okay, but I'd take one of those.
That's right. We'd love to give you that big check or anybody on your team, but the lottery is a lot more than that when it comes to wins. And that's a lot of what we're doing, is trying to help educate Iowans, all Iowans, that those wins can be a lottery prize. Those wins can be the support for the Iowa Veterans Trust Fund. But there's a lot of ways that the state wins. The economy is driven by the lottery and those that play the lottery.
When you think about the lottery and its role in the community, what is maybe a couple priorities as you move forward in your role?
Yeah, well, it's making sure that we're giving Iowans an opportunity to experience those big Iowa moments. We talked about those big billion-dollar jackpots, but you think about experiential prizes, and we want Iowans to have an opportunity to be present for those big Iowa moments, whether it's a concert at the state fair, whether it's a NASCAR race out at Newton at the Speedway, whether it's a concert at Jack Trice Stadium, or maybe it's sitting in a box at Kinnick and doing the wave at the end of the first quarter. Those are the sorts of things that are true win-wins. We're giving Iowans a great experience, but we're putting resources into those local economies and those iconic Iowa venues. So it really represents putting the Iowa in the Iowa lottery.
Most importantly, what are the Powerball numbers going to be for the next drawing here?
Is this thing on?
Yeah. Well, thanks again for joining us, Matt, and thanks for all you do and your team do for not only the lottery, but also for our state's economy. We appreciate that. I'm looking forward to having you as a supporter and learning a little bit more about the lottery all year long. We're excited to have you as a supporter.
Well, thank you, and it's so much fun to engage with your listeners.
Well, we're going to go ahead and shift this a little bit to the future. We've already started dancing around it a little bit, but so I've asked each both Jeff and Brenda to give us a little bit of a look ahead and what some of the issues are that they're thinking about and think that businesses should be considering as we look to the future. So we'll go ahead, Brenda, I'll have you go first here. Take a minute or two to give us what's something that you're keeping your eye on for the future here.
Well, again, speaking on behalf of the trucking companies that I represent, they are looking to the future with optimism. They are looking to the future because there are some things changing and moving in the right direction for trucking. As of November, there was really a shift in freight revenue. And one interesting area that they're watching very closely, and it's the flatbed sector, that's really seeing some significant momentum. And that's a good sign for all of us because that sector represents, they do a lot with building products, manufacturing, and that's showing that there is confidence that those sectors are improving. And some pundits have even said that they believe, trucking is going to be turning around and be pre-COVID levels by Q3 and Q4 of 2026. The folks that I represent here in Iowa are saying 2027 is going to be their year, but what they're looking at is just what kind of activity they are seeing in the housing market, in the manufacturing sector, and what kind of momentum is going to continue. We also are just finishing up the winter months, right? And that is a really important time for trucking because November through March, the winter incidents across the United States impacts trucking, and it really impacts margins and profit and revenue. And so we're ending that period of time. And so trucking is very excited to have the winter months behind us, to see this momentum increase. They're going to continue to look at these positive sectors, housing, manufacturing, consumer confidence, is that improving? But the one blip on that screen, if you will, is just the geopolitical atmosphere. And so we do pay attention to that, not only what's going on in Iran, but just what's going on around the world, what's going on in Mexico and Canada. And so what I am sensing is just a lot of eyes on a lot of moving parts that all contribute to our economy. But I do feel that we're moving in a different direction. Capacity is not going to change overnight, which is different from previous recessions. We're seeing a slower exit of trucks out of the market, but it is happening. There's just a lot of factors that are starting to align. And so we're watching all of those. And that would be a subject for a whole nother podcast, Chris. There's just too many components. But I would think overall, they're feeling good. Even with the conflict that's going on in Iran, they're feeling good about the overall economy. They think it's moving in the right direction. Not as fast, of course, as we would like it, but it's still moving in the right direction. And given the last 3 years, that's a refreshing change. And it's good to hear some optimism among the members.
Good. Jeff, why don't you give us a take on something that you're watching in the future here?
Well, first off, with fuel, it's supply and demand. So the sooner we get a supply-demand balance, the better off we are. And there's some countries right now that are in worse shape than us. In Asia, because more of their fuel is coming through the Strait, they're looking at how do you tamp down demand. They're doing 4-day work weeks in some countries, things like that. That's one thing we're looking out for if this continues very much longer or the after effects are very long. It's a global economy. Eventually, supply, demand, we're only hit by prices right now. what happens if this continues. Now, the two other things that we're also looking at, and they're almost extremes, but they're really linked, is AI and people. And AI has a lot of promise. I think everybody talks about what AI and technology can do. The one thing that we always stress is technology is not a solution by itself. Technology will not do something. You have to have it. You have to have what is your solution, and then use AI or technology to solve it. So exciting about some of these promises here, but we have to use AI or technology to take away issues that people don't need to do, so people can be people. Now, I'll end on the optimistic also. Customer experience, and there's a huge change in. Yes, people talk about, we don't need people in jobs anymore. But we're also seeing the opposite. We're seeing people are embracing the customer experience. You can talk about this store or that store has more customers because of how people feel inside the store. But we're also seeing, I saw something the other day, malls are coming back, and mall sales are really close to where they were in 2019. And the experts are saying it's because of Gen X. Gen X feels that they had 2 years taken away from them because of COVID, where they couldn't talk, they couldn't interact. They're coming back in big numbers, and they want to interact, and malls are changing. They're more experiential. It's not just about buying things, it's about doing things. And when people want to do things together and people want to be together and be human beings, I think that's super positive for any industry you're in and any community you're in.
Brenda, you mentioned a couple data points that you were feeling positive about. I'm just curious if somebody was interested and you were saying, hey, here, what would be a good data point for somebody that's maybe not in the industry that you think would be a good one for folks to be watching if they were curious about maybe where the economy might be heading? You mentioned flatbed trucks as an example, but I wonder if you have an example of one that you think might be interesting for people to pay attention.
Well, this is a very simple one. And when I first got into this industry, a seasoned CEO told me this, and it may sound absurd, but just the number of trucks on the road. In Iowa, especially, I-80, I-35 is the crossroads of America. And if you travel at any time, you're going to see the number of trucks on the road. And that in and of itself is a huge indicator. And as more and more trucks are on the road, that means more and more product is being delivered, right? And that means the economy is starting to rebound. So that's a very simple one. Or seeing where they're parked, at a truck stop or at a rest area, just seeing the volume. And I do travel a lot in the state, and there has been an increase. But the other key indicator for trucking, like I said, they really are watching the housing market. And again, that's hard for the average consumer, the average person on the street to watch or monitor. But if you're seeing a lot of houses being built, just think of the trickle down of all the other suppliers that are involved with that. And so I know in talking to some of the real estate folks and just home builders, they are seeing an increase too. But the really easy one is just the number of trucks on the road at various hours, not just during rush hour, but at any time. If you're seeing a steady increase of trucks, that means things are moving. And the last couple of years, that wasn't always the case, especially in the evenings, sometimes on weekends. I have noticed more trucks on the weekends too. So that's really the simple, easy indicator that somebody doesn't know anything about trucking. They may not like it because now they're sharing the road with a bunch of big trucks, but that's a good thing. That's a good thing. That means things are moving and the economy is moving.
Well, I'll get my 6-year-old out at the I-80 truck stop. Yeah, and we'll do some truck counting. That's our we make the trip down I-80 all the time to go back to see family, and so that's been the tradition. We stop there, and he gives the couple of the honk horns, and whatever the weather is, we're out there asking for trucks to honk their horns. So next time I'll have them count them. We'll start our business record trucking index based on.
Yes, I know it sounds absurd, but it truly is what I'm told all the time, and now I'm much more observant, if you will, because it's what we do. But that is a good indicator.
Jeff, I'll flip that question, the same thing to you. Is there a good data point that within your industry that you think folks could pay attention to that might be indicative of what's going on in the economy?
I think cars on the road is probably the biggest indicator. If people are moving about, if people aren't worried about, the average car based vehicle miles traveled is about 30, 32 miles a day, depending upon the year, but it's right around there. When gas prices go up, there's not much fat in people's driving. There's no Sunday drive. People don't drive because it's fun. They drive because they have to. So whether it's to work or whether it's driving kids around or whether other obligations, but if you see any sort of decrease in driving, that's an indicator that things aren't going well. Yes, it may make traffic jams lighter, but traffic jams are actually our friend in an economy. So having more people on the road is a good thing. And if you see that start to wane off or wane a bit, that's a warning signal. So trucks and cars on the road in a robust economy, it means things are usually going pretty well, even if you may not feel that way.
Very scientific, isn't it, Jeff? Just, very scientific indicator.
Yep.
Well, I appreciate both of your time today, and I'll give you a chance to give maybe a closing thought, maybe one more thing for folks to think about as we head out. So Brenda, I'll have you go first, and then Jeff will have you wrap us up.
Well, I appreciate sharing the screen with both of you. And I guess my parting remark would be, trucking is such an important part of the state, this country. And there's a slogan that we use that always seems to stick. And if you've got it, a truck brought it. So I always love to remind people the quality of life that we enjoy is really due in part to the efficient delivery of the products, and trucks do that. And it's not trucks. I need to clarify that. It's the men and women behind the wheel of those trucks. Those professional drivers are amazing, important professionals that deserve our appreciation, our respect and admiration. And they're really critical to the quality of life that we have. And so I always have to put a plug in to those professionals. Over 4 million of them in the country, just truly are important to our everyday life. And I think far too often we take that for granted.
Well, thank you, Brenda, and thank you for your work supporting the folks that are helping ensure our goods are getting to the convenience stores and of course to our businesses as well. Jeff, go ahead and give us a wrap-up thought.
I think with all the things that divide us or ways that we can think about things that divide us, the one thing that can totally unify us is nobody likes high gas prices. It's bad for the economy. It's bad for the local pocketbook. I think everybody is looking forward to gas prices peaking, moderating, dropping. It enhances the economy. It enhances people's moods, and everybody's a little bit better for it.
Well, I've got to get to the gas tank after this, so I appreciate both Brenda and Jeff, your time and energy and insight today, giving us a little bit of a look behind how gas prices, but also, of course, two big and important industries here in the state ultimately affect business here in Iowa. So thank you for your time. And it's Wednesday, Jeff, so I think I'll have to stop and grab myself a slice of pizza. I think it's been a long week.
It's part of that healthy to other options transition as you go through the week.
You got it. If it was Monday, yogurt. Today, pizza, I think is the answer. So again, thank you again.
I love that. That's an interesting trend.
Well, again, thank you to both of you for being here today. And of course, thanks to our sponsors, CLA and the Iowa Lottery. We can't put on programming like this without the support of our sponsors. So I hope you take a moment to learn more about both our supporters. If you enjoyed today's show, please like and subscribe and tell your colleagues. And we firmly believe that we're stronger as a community when more people have better information to make better decisions. That's what helps make your business better and our community stronger. So thank you for watching. And until next time, keep your eyes up and peering ahead of Iowa's economic curve.